Welcome back to K-Ratio's Week in Preview. I'm Kyle Lintner, and I'm here today to provide actionable insight for the future, not recap the past. In this week's episode, the race is on between spot rates and contract rates, though no matter which one wins, shippers lose. We'll break down what that means for you this week, but first, let's take a look at where the freight market currently stands. Since the jump above 15,000 on February 25th, tender volumes have not come back below that number, sitting at 15,652, still 40+% higher than any other year on record. Tender rejections continue their streak of days above 25% since February 17th, now at 26.5%, drastically different than 2020 in purple, 2019 in green, and even higher than 2018's 25.4% in orange. The implied accepted tender index from these two metrics is still 11% higher year over year, and a shocking 38% higher than 2018, reinforcing the idea of heavy volume and capacity dislocation rather than the latter alone. That massive demand, coupled with our shortage of capacity overall and seemingly never in the right places, is the reason truck stop spot rates sit just a penny off all-time highs at $3.31 a mile. The real shocker this week is DAT's contract for spot spread. Though slightly tightening by 3 cents, it remains extremely wide, with spot 12 cents over contract, but the twist is the contract part, where rates are already up 14 cents since February, and the $2.59 per mile reading is now good for 51 cents better year over year, a 25% increase. Even worse for shippers, the contract versus spot spread for reefer rates has moved out another 5 cents to 35 cents spot over contract. For context, this spread was contract 38 cents over spot during April's COVID lockdown lows. Life in America has changed tremendously since then, especially life in freight. By overall load volume, dry van dominates refrigerated, but the recent price action in reefer rates is extremely troubling and has implications for dry van as well. Since reefer trailers can haul dry loads but not the reverse, we can remove any idea of additional capacity coming over given the level of reefer demand, high reefer rates, and the pending produce season. Should this situation get any worse, however, shippers on the fringe of reefer requirements, think gum or candy, might opt for dry van instead, and that spells absolute doom. Most everyone is familiar with DAT's load-to-truck ratio, but the newer dark capacity metric adds another layer to our supply and demand equilibrium. Load-to-truck ratio is just that: loads posted divided by trucks posted for any given market location. Yes, systems are in place to remove redundancy. Yes, sometimes that still occurs, but that only signifies a stronger level of demand intent. That number is on the map on the left, as well as the dark blue line in the chart. The dark capacity reading is the measure of load searches divided by truck posts, seen on the right-hand map and the gray line in the chart. Load-to-truck ratio measures demand, and as you can see, it's been trending higher since late January. Load searches to truck ratio measures supply, and as you can see, that metric is as flat and constant as can be. In a nutshell, that is our entire problem right now. More and more brokers looking for trucks to take their loads, while the number of trucks looking for a load has not changed. Load demand continues to outstrip our inelastic supply of trucks, and higher prices will not cure this in the short run. What does this mean for freight this week? Carriers, name your reefer price. Seriously. LA to Vegas, Stockton, even Seattle, all above $4 a mile. And it's not just LA. Chicago to Memphis, Charlotte, Harrisburg, even Atlanta, all above $4 a mile. And Chicago to Columbus will get you nearly $6. Brokers, there's no way around this. You need to reprice your reefer business before produce season sets in. Shippers, I'll skip the I told you so regarding $4 reefer rates, but remember that West Coast volume breather we mentioned last week? Well, it's over, so get ahead of this before dry van rates begin with a 4 handle as well. To stay current with everything freight, follow us on LinkedIn, or for more information on all of our products, including our award-winning freight intelligence platform so your margins don't end up where they are today, check us out at k-ratio.com. Please stay safe, and thanks again for watching.